Hi everybody, Ken Heinz here, HFR President with the HFR 500 March 2023 Performance Snapshot. March was a significant month, a volatile month, an inflection point for overall market and hedge fund performance. We had a mixed month of hedge fund performance with leadership from Equity Hedge, what ended up being a very volatile month for Equity Hedge overall. There was really four main themes that drove performance in the month. First and most significantly, we had a surge in bank financial risk. This not only associated with the closure of Silicon Valley Bank, but also the acquisition of Credit Suisse by UBS. This leads to the second theme, which is a new precedent for government and regulator involvement in a transaction such as that in a stress situation. Thirdly, we had a repricing of a significant area of fixed income, which is the AT1 financing, and certainly impacted a repricing that impacted not only the current holdings, but the prospects for future issuance in this area. And then fourthly, the volatility of the month certainly affected the trajectory of interest rates. I think we came into the month of March thinking there would be continued interest rate rises, and now investors are really discounting an end to the interest rate increasing cycle over the course of the month. So a significant month for sure, and one that has significant implications for hedge fund performance in coming months. As I mentioned in the previous slide, we had leadership from Equity Hedge in what ended up being a very volatile month for Equity Hedge. You can see here, by the time the month concluded, the Dow Jones had posted a gain of about 1.9%, but obviously beneath the surface of that, significant volatility throughout the month. We had a gain for the HFR 500 Equity Hedge Index of about 86 basis points, a narrow decline for the HFR 500 relative value, that's fixed income based strategies, of about 60 basis points. We had a decline of about 1.2% for the overall investable HFRI 500 composite, and then Equity Hedge and macro both declined. Equity Hedge is really where a lot of that fixed income credit risk associated with the AT1 bonds and the repricing of those resides. So about 1.8% decline then, and about 4% decline for the HFRI 500 macro index. Obviously, we know this has been a strong performer for about the last year and a half, and the biggest impact there was when we saw this flight to quality associated with this significant increase in bank risk. You actually saw some trend following strategies which were short that front end of the curve experience losses associated with that flight to quality. Moving one level deeper and talk about March performance leading sub-strategy areas of performance. Here you see what I was referring to earlier, that you really had strong leadership from Equity Hedge and what really was a volatile month for Equity Hedge, even though they ended with a gain for the month. You can see here the HFR 500 technology gained about 2.25% and 2.2% for the HFRI 500 fundamental growth index. A lot of similarity between those two indices. And then you also saw strong gains from the quantitative directional 1.8% gain there and 1.5% in the event-driven multi-strategy. So that was one area that was pretty well insulated from the repricing in the AT1. And then finally, you had a gain of about 0.2% in the Equity Hedge fundamental value index. Taking a slightly longer view of time at the strategy level and looking at year to date, which really is the first quarter of the year, you can see that overall it's been a good year for hedge fund performance overall. You can see that Equity Hedge has posted a gain of about 3.25%, that obviously topping the narrow gain of about 0.33% by the Dow Jones Industrial Average. Also, we see event-driven strategies, even with the loss in March, have still posted a strong gain of about 85 basis points for the month, about 0.5% gain in fixed income-based relative value, and a little more than 0.5% by the overall composite. The only hedge fund strategy area that's declined for the month is the macro index, which you know was a strong performer in 2022, and most of that decline really in the month of March associated with the flight to quality and the losses in people that were short, in strategies that were short the front end of the curve when that happened. Let's Still considering the year-to-date and first quarter recap results for the, now drilling down to the sub-strategy level, you can see that the strongest performers, the leading areas of performance have been in the equity hedge and event-driven space. You can see here the leading area of sub-strategy performance is actually the event-driven multi-strategy index with about 6.75% gain thus far for the year. And you see that well exceeds the gain of U.S. equities. Here we have about 38 basis points and better than 5% gain in the equity hedge quantitative directional, 5.1% there, 4.25% in the HFRI 500 fundamental growth, 4.2% in the activist index, and then just under 4% for fundamental value. Again, all of these the leading areas of sub-strategy performance thus far for the first quarter and year-to-date for 2023. As you know, there's a lot of great material on our website about the Investable HFRI 500 index. Certainly, if you're watching this video, you know that we do regular performance updates on YouTube. So please continue to watch these. And if you can subscribe to the channel, let us know if there's any questions or areas you'd like us to focus on or in future videos. If you'd like to set up a call with myself or anyone in HFR, you can email me directly, Ken Heinz, or HFR500@hfr.com. Please visit the website. As you know, that's www.hfr.com. When you do get there, please click on the Investor Guidebook, which is a material that we've prepared that really, I think, does a good job of articulating the multiple ways that the HFR 500 constitutes a solution for common benchmarking challenges that institutions face. So please feel free to download that and let us know if you have any questions. Thanks, and look forward to speaking with you next month.